please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Now, yesterday back home on Dalal Street, weak global cues dragged the Nifty below that 10,500 mark. The Sensex too closed about 0.5% in the red. They did recover late trade in yesterday's session, but then again remained under a bit of pressure. That's because Bank Nifty, that one slipped over 1%. Mid-caps relatively outperformed, ended the day flat. But the SGX Nifty indicates a sharp cut at the open. Weakness in the global cues continues. Ekta?
Yes, absolutely. So yesterday the markets really recovered but were still weak, you know. There are the global cues, the PNB banking fraud, FII continues selling, the rupee bond weakness, which is really weighing on sentiment cumulatively. So for example, PNB, which is now down 55% from its October highs. We have the PSU banking index, which is down 24% from the October highs. So you can see the stark underperformance, one of the PSU banking index as well as of PNB. Now what we're also seeing is that private banks are becoming weak. So ICICI Bank, Axis, Yes Bank, all of them have lost around 10% on a month-to-date basis. FIIs have continuously sold since the 5th of Feb. We haven't seen one net buy figure come through for them. So they've sold over 18,900 odd crores, almost 20,000 odd crores with yesterday's FII net sell figure. And at the same time, however, it's been largely mitigated by DIIs, which have net bought over 17,000 odd crores. But it doesn't take away from the fact that there is something that the FIIs are not liking about this market, or they're probably rejigging their portfolio globally as well. The rupee again turns out to be a little bit of an incremental worry, because yesterday on an intraday level, the rupee hit 65.27, which is the lowest that we've seen all the way back since the 16th of November. Now, in terms of what's happening globally today, the US is weak. We have the 10-year yield, which hasn't really softened on a day-on-day basis. Plus, we have the Bank Nifty options expiry. The broad range that we're working with for the Nifty is around 10,300 to 10,600. We have the recent low of 10,302, which I think we had hit on the 9th of Feb as probably a support level to watch out for. And obviously the 100 and as well as the 200-day moving average. Averages. In terms of the macros, that seems to be a support level, but remember, this is backdated data that we're working with. So Q3 FY18 GDP at 7.2%, core sector for Jan is coming at 6.7%. We have auto sales today, which would be a high frequency data point that the street will look out for.
Fair point there, Ekta. A lot of the stocks that will be in focus, starting with Fortis perhaps?
Well, yes, Fortis will be in focus on account of releasing its Q2 as well as Q3 numbers. And besides that, the auditors have not signed off on these numbers, considering the pending investigation with regards to the related party transactions, which they had reported some time back. So there is no auditor sign-off which has taken place. The numbers are not really going to be top of mind this time round. Nobody cares about the numbers as much as they care about what the auditors had to say. So largely, I think it's a status quo. You're left hanging thinking that you don't have any sort of clarity which is coming from the auditors, which you expected, but at least you know, it's probably not the worst case scenario which has come out. The auditors haven't signed off, which would obviously be a negative, but remember that the promoter holding is down to 0.7%. They have a lot more in terms of, you know, news which they're working with, which includes obviously a pending deal. Other stocks in focus includes SBI, where the debt of around 19,000 odd crores. Totally, they are the consortium lender to SL, which has filed for bankruptcy. ICICI Bank says bank is part of a working capital consortium to Gitanjali Gems. Tata Power, Reliance Power, MOIL, L&T Infotech, all of these stocks should come up for you one by one, and they would be in focus in today's trade.
All right, Ekta, thanks a lot for that. We'll keep an eye out on all those stocks, but time for a short break now.
Well, India's economy grew by an impressive 7.2% for Q3 of FY18 on the back of strong showing in agri, manufacturing and construction. This is the highest quarterly growth recorded since the second quarter of FY17. GVA, which is GDP minus taxes, has grown by 6.7% for Q3 FY18, mildly better than the expectations of a 6.6% rise. Is this the turnaround quarter? Lata joins in with her editor's take. Lata.
Well, the GDP GVA news is good, but not as good as the GDP number indicates. You know, that number has come in at 7.2% for Q3 compared to expectations of 6.8. The news is not that great if you looked at the GVA number. The poll threw a number of 6.6%, and what we have actually got is 6.7%. So, okay, it's marginally better than expected. But let me first tell you the good news. The good news is agriculture growing by 4.1%, manufacturing, which has grown by 8.1%. That's higher than several past months and quarters. And electricity as well, 6.1%, fairly decent number. But the best number really is construction, which has grown by 6.8%. That's the best number in probably, 3-4 years, which means 12 quarters we have not seen such a strong construction number. So there's certainly something positive to say about the third quarter GVA numbers. The difficult ones to swallow is GDP is higher because GDP is GVA plus taxes, which means tax collection has looks like is very high. It's quite possible that GST taxes came in, but the input tax credit was not given adequately. It's also because the year ago tax collection was very poor for indirect taxes in particular, and that's why the GDP gets a boost because of higher tax collections. So there is a bit of an optical illusion about this very strong 7.2% GDP. Again, capital formation looks very good at 12%, but that again seems to be like a one-off, because if you look at the yearly projections, then capital formation is actually lower than the year ago level. Private final consumption expenditure has come in at only 5.5% for the third quarter and 6% for the full year. Again, that doesn't show a roaring economy. That said, the third quarter GDP is certainly a number better than what people have expected. Whether this is a start of a very strong upturn, we cannot yet say, because the banking sector is still maimed. And secondly, as these numbers themselves point out, exports are pathetic in India, just 2.5% growth in the third quarter. So clearly India is not participating in the global growth story. That's the negative.
All right, fair point there, Lata. We'll keep an eye out on all those data points. But my colleague Sapna Das also caught up with Subhash Chandra Garg, the Economic Affairs Secretary. He said that India was over the hump as far as growth was concerned. We also caught up with TCA Anand, the former chief statistician, to get a sense of what he made of the GDP data. Listen in.
The third quarter growth of 7.2%, especially manufacturing growth of over 8%, construction growing at 6.8%. All these indicate, and accompanied by a very good investment number captured by the GC, the gross capital, gross fixed capital formation. All this indicate that we are over the hump. It's economy back to normal, growing at one of the highest rates in the world. So you are there. Everything indicates that. Yeah.
So Q4, can we expect somewhere around in the 8% region, and how will this really impact your FY18 estimate also? 6.6 is what has come out in the revised number, but closer to the CA's admission of 6.75.
Oh, certainly our expectation is that the quarter 4 would be still better, and we would be closer to what the numbers are there in this economic survey that should be achieved. So 6.6, what CSO has put out as revised, we expect it to be upwardly revised when we have the quick estimates coming up in May.
Right. So around the 6.7% levels, as indicated in the econ survey, or somewhere around that?
You can't be very specific. That's the economy working measured by the CSO and all. But indications look very clearly and firmly that expectation that you would be closer to what has been put out in the economic survey and what we have taken into our budget estimates would be the reality.
So what are the challenges now, given these numbers? What are the big things that you have to now do in terms of pushing the investment cycle? Because if you look at the numbers closely, the private consumption has not really gone up to that extent. And it's the public spend that is probably keeping the economy going, but keeping your fiscal constraints in mind, how long do you expect that to continue?
It's not exactly like that. Private consumption has also been very good, close to about 59-60% in this quarter, if you've seen. The government consumption is slightly lesser than what it was last year. So it's not the government consumption driving the economy. So private consumption has also returned in my sense, in my judgment. So you would see both on the investment as well as on the consumption side, the growth being driven going forward.
What we are seeing in the agricultural growth, and in fact the improved number of the agricultural growth, is a fairly strong improvement in the non-crop side of agriculture. And some of this was intimated by agriculture in their revised estimate which they had put out, I think sometime in the month of December or January. I think January. Those improvements in agricultural growth are playing a role both in the improvement in GVA as well as in the strong showing of the agricultural growth.
It's the first of the month, and as every month at the first of the month, we shift gear to the auto space. February auto sales numbers due today. Sonia Shenoy joins in with the key expectations. Morning, Sonia.
Hi, Mangalam. Good morning. Well, if you remember, last month's numbers were very good across sectors, and this time around as well, the trend is expected to continue. Now, you know, because of demonetization, there's a low base effect, so that will aid the sales this time around. However, on the retail front, there were a few inauspicious days this month, and as we know, on inauspicious days, there are generally no purchases. So in Gujarat, Maharashtra, etc., retails were a bit impacted. But stripped of that, most segments have done pretty well. In the two-wheeler space, in fact, you had a good rebound seen in exports as well as in the three-wheeler sector. So, you know, names like Bajaj Auto, TVS Motors will do well. Commercial vehicles saw an exceptionally strong month last time around. So this time around as well, that trend is expected to continue. And in the passenger vehicle space, there were quite a bit of new launches, and that really aided the overall industry momentum. Just to take you through what the individual numbers will look. Now, a double-digit growth across the board is what we are expecting. For Maruti, about an 11 to 12% growth is what we're looking at. About 1.45 lakh units is the number expected. M&M, this time around, tractors will continue to do well. So M&M total sales will go up by almost about 15%. Tata Motors as well, commercial vehicle sales continue to be strong. That is the medium and heavy commercial vehicle segment. So total sales up 35%. Hero MotoCorp, almost a 15% jump over there. Ashok Leyland has had a very good run rate in terms of sales this time around as well. Almost a 30% jump is what the street is estimating. And for a couple of others like Royal Enfield, etc., about 26-27% growth. So across the board, this has been a good month for the sector.
All right, Sonia, thanks a lot for that. We'll watch out for all those data points all through the course of the day. But one stock which will be in focus is Fortis. Released their third and second quarter numbers late last night. Ekta, you've been telling us that the numbers don't matter. The promoter stake is down to 0.77%. What's the road ahead for the company?
Well, I think the street is just looking at what's going to happen. One, with regards to the SEBI, as a SEBI investigation on the related party transactions or the loan of over 470 odd crores or transaction which took place with regards to a subsidiary of Fortis. So that is something that the street will be looking out for. When you're talking about the numbers itself, the auditors have flagged off that, you know, they did not sign off on the Q2 plus Q3 numbers pending completion of this particular probe. The probe is to do with these related party transactions. The auditor says it's unable to conclude an impact on earnings. And however, it also goes on to say it cited unsecured advances due from vendors for which repayment terms have not been set. So these are a couple of things which have been flagged off by the auditors. Net, it's definitely a negative. The numbers also don't look great this time round. So that too would probably add to the pressure. But what would negate it is that the promoter holding is down to 0.7%. Asset base continues to be strong for the company. So if anybody wants to do a deal, you know, the promoters are completely out of the way and the assets remain.
All right, that is the key data point out there. The promoter is completely out of the company. Assets remain. Any deal, well, very much on the cards. But let's move on to the latest in the 12,800 crore rupee PNB fraud. The news is tightening around Nirav Modi and Mehul Choksi. Investigative agencies up the ante. We learned from sources that the Enforcement Directorate has now moved the Prevention of Money Laundering Court seeking non-bailable warrants against the two accused jewelers. Sources also say the non-bailable warrant will enable the ED to begin their extradition process. Meanwhile, we also learned that on taxman's request, the Bureau of Immigration has initiated a process for a lookout or notice against both Nirav Modi as well as Mehul Choksi.
All right, investigative agencies have also begun a crackdown in several other bank fraud cases. CBI has filed an FIR against West Bengal-based RP Infosystem and its directors, and they are accused of a fraud of over 500 crores. Utkarsh Chaturvedi has more details.
Let me explain the case to you first of all. So RP Infosystems is a company which deals into hardware, computers and laptops. Now what CBI complaint given to CBI by Canara Bank alleges is that a loan of somewhere around 515 crore rupees was taken by RP Infosystems, and then in turn going ahead they defaulted on these loans. And now what these bankers are really alleging is cheating on the part of RP Infosystems, basically on three grounds, and I will read those three grounds. One is cheating done through availing bank funds on basis of false and fabricated stock and receivables. Second, RP Infosystems inflated its receivables to show on the books of accounts. And thirdly is that RP Infosystems did not route the sale proceeds through the loan account and siphoned off the entire money. In fact, some of the clients of RP Infosystem which they showed in their books of accounts, such as Seat and Gale, went ahead and said that they had no business with RP Infosystems whatsoever. Now what is important in this case is that these accounts were declared in NPA back in 2013, and in 2015-16 these bankers went ahead and declared the account of RP Infosystems as fraud and reported it to RBI. Now why is it that after 2 years they have approached the Central Bureau of Investigation for really going ahead and looking into this case? Two reasons. One can be obviously that after the whole PNB scam fallout, all the bankers are in a fear to report any such mischievous activities which have been there in the system in the past or going on currently. Or secondly, it can be that they have now gained courage to really go ahead and go to CBI and complain about this. But the more important question here is that if that's the case, how many of these cases at this point of time which have been fraudulent are under the wraps, and how many more cases in the next 1 month or 7 to 10 days we can see coming from the sides of bank, which we can see a mischievous activity or any illegal activity being taking place.
Well, when it rains, it pours. Bad news. In yet another fraud case, the Enforcement Directorate has arrested R. Subramanian, the promoter and MD of Subhiksha retail store chain under the PMLA, Prevention of Money Laundering Act. That is, in 2016, the ED had attached properties belonging to Subramanian for defrauding the Bank of Baroda of 77 crore rupees. Subramanian had taken a loan in 2007 from the bank to establish the chain of retail stores, which was shut in 2009 after facing a cash crunch.
Okay, and after Karti Chidambaram's arrest yesterday by the CBI for alleged involvement in the INX media case, Karti has been sent to a day's police custody. He was arrested at the Chennai airport after he returned from London. CBI to produce Karti before the concerned special judge this afternoon at 2:30 p.m.